U.S. stocks soaring on the sign that the U.K. is leaning towards staying in the European Union. The day's gains erasing most of last week's declines. That was before this last hour, of course. Here to react, Scott Martin, Kingsview Asset Management CIO. He is also a Fox News contributor. We also have Aaron Gribbs of S&P Investment Advisory Services. Aaron, talk to me about the roller coaster today. What's your impression of why we've seen, we saw a lot of the gains being given back here in the last hour?
I think, it was really all about this risk on, risk off, just having that added volatility, certainly taking some of that back off the table when people realized it was just a lot of euphoria, and also just unwinding of those trades. So, for us, I think a lot of people have really expected this in the long term. We've seen a lot of comments. We've seen also, if you look at some of the gambling sites, it's been more like 60% where people think they're going to stay in. So I think most investors have been expecting this, and you're just seeing some of the intraday volatility kind of flush out as we go through the day.
Scott, give me your take. I mean, is that your impression? Do you think it was driven by technology? I mean, what's the deal here?
It was pretty wild. I mean, a lot of this, the buying really, Melissa, started overnight, and then we kind of faded as more investors came to the table. I mean, I think David made the point of the day. I mean, gold was down today about 0.5% at the low, but it came all the way back almost to flat. I mean, that's been the trade that's been on kind of consistently now for a few months as rates have gone down, as economic data has been less than impressive. Brexit vote or not, I mean, we all can probably agree that Britain's going to stay in, but it doesn't change the fact that there are fundamental flaws in the EU organization. They have a terrible economy right now. Those are long-term problems that aren't going to go away whether Britain stays in or not.
Right. Yeah, I mean, Aaron, to me, it's almost like any sort of euphoria that's out there is inevitably short-lived, because you realize underneath it all is just a bit of blah.
Exactly.
That's a technical term, by the way.
And that's exactly what it is. When you're looking at earnings quality going forward in Europe, they're not looking to be profitable to have earnings growth, so higher earnings, until either the fourth quarter of this year or the first quarter of next year. That means that the European Union is making less money than it was last year all the way until fourth quarter, whether Britain stays in or out. So that just isn't an area where you necessarily want to be investing in.
All right, guys, let's move over into another subject. The government targeting yet another merger. The Obama administration's poised to block a $48 billion merger between Anthem and Cigna, citing competition concerns. Scott, first let's talk about the hypocrisy of this. Here you have a government that has been removing competition from the healthcare industry, putting itself in a monopoly position in many places in healthcare, lecturing the private sector about monopolies and lack of competition.
Yes, David, and putting these companies in the position where they're forced to merge. I mean, you think about Aetna and Humana. You look at Anthem, and you see the tens of millions of dollars that these companies in the private sector are losing on the exchanges. So they have no choice but to try to merge and try to get costs under control, because they're getting hammered on the exchanges created by the ACA.
Well, Aaron, is the government going to kill this deal?
So there are some theories that say that they're initially putting out these concerns in order for Anthem and Cigna to actually be forced into more of the exchanges, because right now,
hold on, you're suggesting that the government is blackmailing these companies to get them into the exchanges by denying the deal?
It's not blackmailing. It's part of any negotiations. You ask for concessions. I mean, this is perfectly normal.
Well, I guess blackmail's a matter of degree, but it sounds like at the very least a little arm twisting going on there. All right, Melissa?
Yeah. All right, so Apple pulling out of the Republican National Convention. The tech giant, which has previously backed both parties at conventions, will not provide funding or support this year, citing Donald Trump's controversial comments as the reason. This, of course, is according to a Politico report. Scott Martin, what do you make of a company that's trying to sell a lot of products to a bunch of consumers, of making political statements? I mean, I guess you could see both sides of it. They're trying to please customers on one hand, maybe, but alienating a bunch of folks on the other.
You do, and you get those followers, Melissa, that frankly, I guess in Apple's case, or Microsoft or Google, who are supporting the RNC here, I guess maybe they look to these companies as their moral compass, as their directive. I mean, that's the scary thing. I mean, I'm all for private companies doing what they want to do. Don't get me wrong. But when Apple starts talking about, you remember when they wouldn't hack into the San Bernardino shooter's phone?
Right.
You know, things that are going into a political arena. I think companies have to be dangerous about the stakes they make with regards to how they play their politics.
Yeah, Aaron, or it's a play on China. I mean, you know, that's their biggest market. Or I don't know if it's surpassed U.S., but, you know, right there. And they're also, you know, they do so much manufacturing in China. And
that's where all their growth is coming from.
Right, and that's going to be a huge problem in theory if Donald Trump were to win. I mean, maybe this isn't so much political as it is, you know, watching their bottom line. What do you think?
So, yeah, I agree. I think, you know, they know that their biggest growth needs to come from China and from the Asia-Pac region. And so by not donating a few 100,000 Mac and iPads out, I think is definitely a safer bet. And it's not really going to have an effect on the stock price.
Yeah. Scott, what is the play on China here in terms of, do you think that's their real motivation? And the idea, you know, that they manufacture so much stuff there in sort of questionable conditions. I mean, that's their consumers are always hearing those stories, yet at the same time they're going to take a political stand and say, oh, we don't like Donald Trump on this. I don't know. How do you sort through all of it?
I don't know. You find ways to make your message, I guess, tangible, right? And yes, China, I mean, Aaron's right. China is the big growth engine. Emerging markets for many of our tech companies is where they're going to see that EPS growth over the next couple of years that everyone's looking for. But to me, the messaging just feels a little bit more pronounced on the politics side than it has been in the last several years. That's all.
Okay. Thanks, guys. David.
Good team there. All right.